Look at this capitulation bar. It comes with the spike of the supply and also breakdown of the 3300 support zone without hesitation. And did you manage to catch any downswing? So I managed to use a breakout trading to ride on the downtrend. So do watch out for the trade review section and also pay attention to the later part of the video because I will be elaborating a bit more on the current market condition. Hi, my name is Ming Jong and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 29th of October. In this video, I'll be sharing with you the market recap from yesterday's session and also my trade review in the 3 minutes time frame. So in this case is the breakout trading to ride on a downtrend, and I will cover the entry, the exits, and also the rationale behind. And definitely going forward, I'll be sharing my trading plan for the session later together with the levels that I'm watching. So watch out for that. Alright, so let me just get started now. So as we can see in this daily chart, yesterday we have a capitulation bar. So this is the big bearish bar that's similar to maybe this sort of bar. And that comes with a spike of the supply level, which is very similar to the supply level in the September. And in terms of the support level, we just have the breakdown of the immediate support level at 3300 supporting zone. And that comes with increasing supply. So definitely yesterday price action was definitely bearish. And let me get down to the hourly time frame and let's talk more on the market recap and what's happening for the yesterday's session. So you can see that the meltdown or the breakdown actually happened just right before the US opening. So this is the US opening session at about 9:30 p.m. at my time zone. So we can see that prior to that, during the Globex session, the Asian and also the London European session, we have already seen the market react to the downside. So just take a look at this. So that's pretty much the Asian session. Just form a horizontal trading range right after the previous day's sell-off. So you can see that the rebound is very weak, and right after this forced breakout at this bearish bar and followed by this breakdown and then continuation to the downside, and eventually during the US opening session we have this kind of the rejection bar followed by a heavy sell-off that with the spike of the supply level. So all in, definitely the supply is very high and together with the bearish results. And you can see that the 3300 to 3320 supporting zone, as I mentioned yesterday, did not really hold. So in fact, it just have one bar just break down straight away, and subsequently the few bars just struggle to get back above the 3300 level. So that actually suggested a very weak rally and with the presence of the supply level. Okay, so let me get down to the 3 minutes time frame and let's talk about this trade review and how I actually trade the breakdown to ride on the downtrend. Because since I think on just a few days ago I already pointed out the failure. So right after the failure, the market weakness is identified. So we definitely would like to participate the downswing and to ride on the downtrend to the downside. So you can see that prior to the US session, let me just highlight this. That's the Globex period, and that's the 9:30 p.m. where the US market opened at my time zone. So prior to that, we have seen a very weak rally, or you can see it as a very tight consolidation. So that's right after a reaction. So definitely the rally is very weak, and subsequently we have a breakdown, pullback, tested the support and resistance, and then following by another reaction down, and eventually forming this sort of the down sloping structure. So my trade was actually based on this down sloping structure. Alright, so let me just walk you through right away. So you can see that I have already marked up this trade. So the logic behind was to ride on the downtrend because the bias is bearish and I would like to participate the sell-off. So I mean the timing is very important, and especially we need to look at the structure in order to find an entry that's favored to us. So you can see that this sort of the down sloping structure actually provide a very good structure to lean on or to trade against to. So that's pretty much a weakness itself because it's a down sloping structure. It forms a lower high and lower low, and right just before this 9:30 p.m. so we have about 1 hour before, we have seen the S&P 500 just broke down. So this breakdown actually presented as a sign of weakness. So the market showed its weakness and subsequently followed by a very weak rally up. And you can see that the rally actually just tested this support, turn, resistance. So when the US market opened, let me zoom in a bit so you can see the volume and also price clearly. So when the US market opened, this is about 9:30 p.m. We have this kind of a doji bar, and then followed by very good volume or good demand behind. But look at where the result takes us to. So just look at this 4 bullish bar. So it doesn't really look bullish at all. And despite with the great effort behind to push the price up, it just barely commits above this support and resistance. So 20k volume, around 20k volume for the 3 minutes time frame, and with this sort of the effort to push up, and it just couldn't commit above the resistance. So right after that we have seen this failure, and that comes with the spike of the supply. You can see it here. So spike of the supply with this big bearish bar, and right after this breakdown, so that's where I enter my short entry. So the context behind is actually based on this down sloping trading range as my structure, and during the breakdown before the US session was already a weakness itself. So this is a sign of weakness, and then followed by this inability to rally up. So despite with all the effort behind, so it just show very weak rally, and eventually I just trade this second breakout. So I always avoided the first breakout, and I trade the second breakout. So this is the second breakout. Right after it just committed or closed below the support level, I just enter short. So eventually I just use my trailing stop and managed to exit my position, get stop out. I think is with this bullish bar at about 11 p.m. at my time zone. So you can see that pretty much I just trail behind this sort of the commitment bar and eventually got stop out here. And we have a bit of the decreasing of the supply throughout with the inability to going down. So a bit of the shortening of the downward thrust, and eventually followed by a rally. But the rally didn't really last, because you can see that right after this rally we have another test, and eventually we just broke lower as well. So definitely there wasn't much demand behind, and the supply is very strong. So that's the trade review for the yesterday's session, using the breakout trading strategy to ride on the downtrend. Alright, so let me just get back to the hourly time frame, and let's talk more on the current market condition. So right now we are in a very interesting era, because there are quite a lot of the things happening at the moment. Apart from the coronavirus confirmed cases, second wave, third wave throughout the world, and election is coming up. and also still have the stimulus negotiation thing is going on. So definitely a lot of the news act as a catalyst for the market, and you can see that just right now, if we just have this kind of the down channel which I have drawn up, and we just break down or break below this down channel and into the oversold condition. So that actually happens at the supporting area. So that's the 3300 to 3320 supporting area. So once it has broken, so this level actually becoming a resistance level or resistance zone. So first thing, I think the S&P 500 need to actually overcome the zone at around 3300 to 3320 in order to have an attempt to climb up to test the resistance at the upper level. And also you can see that this breakdown bar, I believe that's about 10 p.m. at my time zone, actually acted as a resistance as well. So definitely that is somewhere around maybe 33.15. So I will just take the whole range 3320 to about 3300 as a resistance zone. So this is the first resistance zone that S&P 500 need to overcome and commit above in order to see further upside. The other likelihood condition that I actually anticipate is actually have another test of the low at 3260, because we have seen the increasing of the supply level. So I think it's quite makes sense or logical to have another test of the low to see whether we can hold it at this level 3260. Otherwise, if we just look at the 4-hourly time frame, 3200 level is another support level. So that's the previous low that formed in September. So we are not that far away. So that's 3260 and another 60 point, then we'll just test the 3200 level again. So I think this is another likelihood scenario to see how it goes, because the supply level is just very strong and high, and definitely I think there will be further weakness in the market. So if this immediate level at 3260 cannot hold, then I think 3200 is the best bet, because if we just zoom out a bit, we can see that that is actually a natural support level that formed during the buying climax high, and then subsequently have this kind of the support level, and overall we have this trading range act as the support zone as well. So I think it's quite a natural place for the price to attempt to rally up from this level 3200. So definitely watch out for this level. But for the near term level, let me get back to the hourly time frame, and that's probably for the session later. So first of all, the immediate resistance level will be at probably 33.15 or even 33.20. So if there is some kind of the rejection from this level, then that could pose a good short entry. Otherwise, next level, the swing low supporting level at 3260, we just need to see whether the price can have some lift up from here, and that could become some kind of the good long entry with a relatively minimum risk. So if we have even increasing or spike of the supply going on with a big bearish bar breaking down, then I think definitely 3200 is easily seen. This is the end of the video. Hope you enjoyed it. So if you love to learn more on how to increase your winning rate, definitely check out the videos shown on the screen, and do remember to subscribe to my YouTube channel so that you get instant notification of more great quality video like this. And do remember to leave me a comment if you have any kind of the questions, suggestions or comments you want to let me know. Thanks for watching. I will talk to you soon.